Here's a summary of Ford Motor Company's first quarter 2026 earnings call transcript, designed for clear and concise delivery. Introduction. Good day, everyone. Today we're discussing Ford Motor Company's first quarter 2026 earnings. With us are Jim Farley, President and CEO, and Sherry House, CFO. Key financial highlights for Q1 2026. Revenue. Ford reported $43.3 billion in revenue for the quarter. Adjusted EBIT. The company achieved $3.5 billion in adjusted earnings before interest and taxes. Adjusted EPS. Note, while not explicitly stated as a single number, the $3.5 billion EBIT implies strong per-share performance, especially when excluding certain one-time items as noted by the CFO. Gross margin. Not explicitly stated as a percentage, but implied to be strong given revenue growth and cost improvements. Free cash flow. Adjusted free cash flow was a use of $1.9 billion in the quarter, largely due to timing differences, higher net spending, and working capital changes. However, the full-year outlook is positive. Management's outlook and guidance for full year 2026. Adjusted EBIT guidance raised. Ford is now forecasting full-year adjusted EBIT between $8.5 billion and $10.5 billion. Adjusted free cash flow. Expected to be between $5 billion and $6 billion. Capital expenditures. Projected at $9.5 billion to $10.5 billion, reflecting increased investment in growth opportunities like Ford Energy. Segment outlook. Ford Pro EBIT, $6.5 billion to $7.5 billion, steady. Model E losses, $4 billion to $4.5 billion, steady. Ford Credit EBIT, approximately $2.5 billion, steady. Ford Blue EBIT, increased by $500 million to $4.5 billion to $5 billion. Key takeaways from the CEO Jim Farley. Ford is a fundamentally stronger, more modern company. We have a foundation built on industrial fitness. We have the technology, and we now have the unified organization to not just deliver, but to compete to win. Strong start to 2026. The Q1 results reflect sharp execution and momentum for the Ford Plus plan. Organizational evolution. A new end-to-end organization for product creation and industrialization has been established, unifying advanced technology, digital, and design teams with the industrial system. This is designed for faster decision-making and reduced complexity, crucial for the most intensive product and software rollout in Ford's history. Software and services growth. High-margin software and physical services revenue, exceeding $15 billion last year, is projected to grow nearly 8% annually through 2030. This growth is driven by indispensable digital experiences, aftermarket sales focused on customer uptime, an expanding parts catalog, and an enhanced service network. Skunk Works. Integration. Breakthroughs from the Skunk Works model, like the EV platform, are being integrated into mainstream products and processes to reduce costs and improve quality across internal combustion and hybrid lines. Aggressive product pipeline. 80% of the North American portfolio and 70% of the global portfolio by volume will be refreshed between now and 2029, including next-generation F-150 and Super Duty, and the launch of a universal EV platform in 2027. Electrification strategy. Focus remains on powertrain choice, with 90% of global nameplates expected to offer electrified powertrains by the end of the decade. Quality improvements. J.D. Power ranked Ford 4 in the U.S. Customer Service Index, the best performance in 30 years. Resilience. Ford is monitoring global uncertainties, particularly in the Middle East, and has the muscle memory to navigate crises through cost offsets, product mix adjustments, and proactive supply chain management. Key takeaways from the CFO, Sherry House. Our Q1 performance highlights the benefits of our Ford Plus priorities, rigorously optimizing revenue across every segment through leading products and high-growth services, improving operating leverage and exercising smart, accretive capital allocation decisions. Q1 financial performance drivers. Strength in Q1 was supported by favorable cost improvement, calendarization, timing of investments, growth in software and physical services, and higher net pricing. IEEPA tariff benefit. A one-time $1.3 billion benefit related to IEEPA tariffs was recognized, primarily benefiting Ford Blue and Ford Pro. Novelis recovery. Progress is as expected, with an anticipated $1 billion improvement in EBIT year-over-year, weighted towards the second half of the year, net of incremental costs for alternative aluminum sourcing. Inventory management. U.S. inventory is expected to remain within the target of 55 to 65 retail days supply. F-Series sales are healthy as inventory recovers, with effective management of tight supply and a richer product mix. Ford is also spending less on incentives than competitors. Revenue growth despite volume decline. Global revenue grew over 6% despite a nearly 4% decline in volume, as expected with the exit of low-margin products. Strong balance sheet. The company maintains a strong balance sheet with $22 billion in cash and over $43 billion in liquidity, committed to its investment-grade rating. Shareholder distributions. Ford declared its second quarter regular dividend of 15 cents per share. Segment performance. Ford Pro achieved $1.7 billion in EBIT, driven by its ecosystem of vehicles, software, and physical services. Paid software subscriptions grew 30% year-over-year to 879,000. Ford Blue delivered $1.9 billion in EBIT, supported by strong F-Series sales and disciplined go-to-market strategies. Off-road performance trims now represent nearly a quarter of U.S. sales. Ford Model E reported a loss of $777 million, benefiting from portfolio changes and a nearly 35% improvement in Gen 1 losses. Investments in the UV platform and Ford Energy are progressing. Ford Credit delivered $783 million in EBIT, up $200 million, reflecting improved financing margins. Significant risk factors discussed. Global uncertainty. The ongoing conflict in the Middle East and potential significant downturns in the U.S. economy are acknowledged as risks that could materially impact industry demand. Commodity headwinds. An increase in commodity headwinds is expected, primarily due to higher aluminum pricing driven by global supply constraints. Supply chain disruptions. While managing well, the company is still navigating supply chain complexities, as seen with the Novelis situation. Competition. The evolving competitive landscape, particularly from Chinese OEMs, is a factor influencing strategy. Other important statements and discussions. Software and services. The growth in software and physical services is a critical driver of profitability, providing an annuity-like and somewhat countercyclical revenue stream. Truck market. Ford is expanding its pickup segments with offerings like Maverick and future UV and ICE truck models, aiming to capture growing demand across various price points and customer segments, both retail and commercial, globally. Defense complex and onshoring. Ford is in early discussions with the U.S. government on defense-related projects and is committed to playing an outsized role in onshoring critical minerals and addressing supply chain vulnerabilities, particularly in semiconductors and battery materials. Autonomous driving. Ford is closely watching the evolution of robotaxi technology, focusing on developing efficient EVs with the lowest cost of ownership and leveraging its strong fleet management capabilities. Ford Energy. The company is committed to over 20 gigawatt-hours of capacity starting in Q4 of next year, actively contracting customers and viewing this as a key element in achieving its margin targets. Renault partnership. Ford sees significant potential in the partnership with Renault, particularly for cost-competitive platforms in passenger cars to address electrification challenges in Europe amidst Chinese competition, and is focused on maximizing scale and cost advantages in commercial vehicles. UV platform development. The UV platform development is on track, with significant progress in hardware, software, supplier readiness, and plant equipment. The platform is designed to be affordable and positioned to benefit from growing EV market trends. Lowlights, implicit or explicit Model E losses. The Model E division continues to incur losses, though the company is benefiting from portfolio changes and expects Q1 to be the strongest quarter for Model E this year. Commodity price increases. Unexpected increases in commodity prices, particularly aluminum, are adding headwinds for the year. Free cash flow use in Q1. While expected to be positive for the full year, the use of free cash flow in Q1 due to timing and working capital is a point to note. In summary, Ford delivered a strong first quarter in 2026, exceeding expectations and leading to an increased full-year EBIT guidance. The company is executing on its Ford Plus plan, driven by a modernized organization, growth in software and services, and a robust product pipeline. While facing commodity headwinds and ongoing investments in electrification, Ford demonstrates resilience and a clear strategy for future growth and profitability.